I'm not throwing out offers on every deal. I'm not sending hundreds of low balls. I mean, you also don't want to be, known as the guy that's lowballing everything, right? So it's like, if we underwrite 100 deals and we find 10 of them that are interesting, let's tour those 10, and maybe 5 of those we end up seriously going after. And if we're seriously going after something, then the probability of us executing that deal is pretty high, right? So making sure that we're spending our time wisely on the deals that we want to chase.
You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
All right, Jimmy, welcome to the show. How you feeling today?
Man, I'm doing good. How are you?
I'm doing very well, so I'm happy to be talking to you. Let's start with an introduction. Jimmy, who are you? What are you doing? Why are you here? All that good stuff.
Yeah, for sure. So I'm a full-time real estate investor. I have a company called High Five Multifamily. We've been buying distressed assets since 2011 here in DFW. Nice. I've been doing real estate for 20 years in some form or fashion, and started buying apartment buildings in 2017, and really just been kind of riding that wave. We have like 250 units right now. We had about 900 at some point, sold a lot in 21, 22. And now kind of back in buy mode. We do C to B value add stuff in Dallas down to San Antonio, 100 units, give or take.
Wow, nice. Well, there's a lot to get into there. Let's kind of rewind the clock back. What brought you into the business originally? What were you doing, and how has it evolved over the years?
So it's kind of a interesting story. I have a degree in finance real estate, and I really took the emphasis in real estate because finance classes started getting really hard. I like numbers. I think everyone should have a good understanding of finance, but once you get into these giant equations on the whiteboard like Good Will Hunting, it's just that's too much. So our professor had us read Rich Dad Poor Dad in my intro to real estate class.
Wow,
totally changed my life. I kind of blue collar, lower middle class. A lot of my friends lived on the top of the hill. So I knew kind of business owner friends, parents, but it wasn't really a thing that I had like direct exposure to. So I was like, hey, how do you get rich in real estate? Well, I got my real estate license, did that for a couple years, moved. That was in Houston, and then I moved to Dallas in 2009, got into mortgages. So did probably 1,000 mortgages over a 3-year span. 2013, just started flipping houses full time. They shut my branch down. I had invested a bunch of money in Apple. Steve Jobs died. So I just, I had all of these things that I thought were controllable, but it turns out I have zero control, right? So took the money, bought a small house, made a profit, rinse and repeat. Did that for call it 5 years. Found out about apartments. Really like the value add apartment business, and mostly because while you are improving the asset, improving resident life, it's also cash flowing. That was the one thing about flipping houses that would be a downside sometimes, right? There's nobody in there paying you holding costs, right? So
sure.
That was really kind of where the mindset shift was. And I found out you could get great leverage, and then just really learned how to increase NOI through the apartment game. And it was, I liked it because if you're a good operator, you should get, a better valuation, right? Whereas in single family, if you have 3 comps in the neighborhood that all sold for trash, then that's what you get. So, you could have a $300,000 house, rent it out for 50 grand a month, but it's still a $300,000 house, right?
Yeah,
So
that's a good point. Well, talk to me. Was there anything that you brought with you from what you learned in the single family space and the fix and flips to apartments? And then, if so, what were they? And then on the opposite end, what did you need to really learn? What were some of those hurdles in the early days?
I think it just has allowed us to have, the vision, right? And through single family, you also learn, you know, the disadvantages, right? Is it on is it on train tracks? Is it on a busy street? Is, the master upstairs? Is it, this, that, and the other, all the little things that could be big things. And then also, inside the unit, does this light switch turn on this light? You know what I mean? Just like small things that, we call it 100 little things, right?
Mhm.
So if you walk into a unit, and you step over, 5, 6, 7 things that are a little off, then you start looking and you find a lot more. But, if you've got 99% of the things dialed in, then, you're not going to catch the 1 or 2 things that are out. So, really just putting residents first has become kind of our, motto. I think that, at the end of the day, we're all in a sales job one way or the other. And, our customer is the tenants. And, if they're not happy, then we're usually not happy. So,
Yeah, it's a good way to look at it.
yeah.
Definitely. What were some of the how did you get into the multifamily side? Did you have a mentor? Did you what brought you into that space and what helped you to take that leap? I feel like a lot of people want to do it or but they don't know how to get started, that kind of thing. So I'm
Yeah.
curious to
Yeah.
hear your side.
Yeah. So my business partner, Catherine, she was doing kind of the due diligence for apartment owners in Dallas, with a company called the Omni Group. And they had a lot of presence in DFW through some mentorship groups. And so we plugged into a local mentorship group here. And, I really learned, how we can all grow together. The biggest kind of transition was, going from, again, you know, a job in stocks, into doing my own thing, to then going back into, building a team. I thought, hey, I could buy, I got a dozen rental houses, flipped 100 houses. I should be able to buy a 20-unit apartment complex. As it turns out, it's none of that other stuff matters, right? And it's
Yeah.
like, have you had an apartment building before? And I'm like, well, no, but I got 12 rentals. And they're like, well, that doesn't matter. So we teamed up with some folks that we knew that had done it before. And we're kind of in their life cycle of wanting to do deals but not the sweat equity, right? And so we were hungry and thirsty. And so we partnered with a couple of great guys for a couple of years, and did really well. And I learned a lot from that experience. And it's we can all win together type of mentality.
Well, like you said, it takes a team and pretty much anything in real estate, but especially the bigger you go, the more people you need on that team when it comes to acquisitions and the capital and the execution from construction, property management, all. Has there been a side of the business that you've gravitated more towards? What's that look like?
So yeah, I I enjoy acquisitions. I like chasing deals, and I like putting deals together. I would say, I'm more of a hunter than gatherer, right? So I kind of, the model that works well for us, and really has been, I've been in sales probably my entire life. But I like to hunt, and then I like to have a group of people that like to skin, right, and chop the meat and do all those things. And Fortunately, we've built a team like that. My partner, Catherine, she is her background's in property management and construction management. And so she really does enjoy, checking the boxes and filling in all the blanks and, doing a lot of the minutia, that is important, but doesn't, allows us to have our combined core competencies work well together.
Yeah, no, I think that's so important. Is when you know yourself and what you want, versus your strengths and your weaknesses, and you can leverage other people's as well. Because to your point, I mean, there's really not any part of the team that's more important than another. They all come together to make the deal work and to have a successful outcome. Now, talk to me about the hunting process. Are you working with? Are you going direct to owners? You doing cold calls, letter campaigns, that kind of thing? Because you did say you had your license and all, so maybe you're
Yeah.
going back to those days. And you're working with brokers, do a little bit of everything. What's that look like?
Yeah, a little bit of everything. I have found that the broker relationships are the most valuable. We've done letter campaigns, cold calling, but at the end of the day, like these brokerages, I can't compete with them, right? Because they're always going to have a new intern that is dialing for dollars,
sitting there with a
right?
spreadsheet or something,
Yep.
or just calling all day.
Call. And so I realized that I couldn't compete with that, right? So if you can't beat them, join them. And that's really what I've, spent, outside of operating the deals. I spent a lot of time, talking to my broker friends and, seeing what they got going on and, sharing, comparing notes. Right.
Mhm.
To me, that's been super valuable, but I also, I love real estate. I like to talk about it. And I have a lot of friends that are also owners. So, it's also not uncommon, to get a call from an ownership group saying, hey, we're thinking about selling this deal. If we could, if you're interested, we could move quick. And then, if it doesn't work for me, then, they'll push it out to the brokers. So, a little bit of both, right?
Mm. Yeah. Yeah. Any tips or tricks or secrets? Because you're in very competitive markets. I mean,
Yeah.
there are markets that I'm sure you don't just have a lot of local play from guys like yourself who are in that area, grew up there, and want to invest in their hometowns, kind of a thing. But you're also getting play from people all over the country. Yeah, I mean,
Yeah.
looking, is there anything that works for you from that perspective to be competitive in that world, or?
Yeah, I think that, and it didn't start that way, right? We bought a 16 unit here, in Grand Prairie, and we ended up 1031ing that into a 100 unit deal in Lubbock. So we
Nice.
did
Nice.
a couple deals in Lubbock. Catherine and I both went to school there. And then we've done a couple deals in San Antonio, and then now we've got the track record, we've got the experience and the reliability to be doing more Dallas deals, right? So it takes some time, and I think that the really the most important thing is a surety of close, right? And so having worked with the same brokerages but in different markets, we've kind of built that reputation that hey, we do what we say we're going to do, right? And with our team, when we're touring a deal for the first time, we usually have a pretty good idea of how much the capex is going to be, just on the spot, right? And so there was some times at the top of the market where our offer was lower, but we had a significantly higher capex plan, right? And so it kind of, we didn't, sometimes it costs us winning deals, but a lot of times those deals would get retraded because the capex value was understated, and they get on site and they do the due diligence and they realize it's going to cost more. And then,
Yeah.
after a couple times of that happening, right, we start getting the calls and, and now we're the guy that it's like, the brokers are like, hey, seller, this guy's probably willing to overpay, but I don't know him. This guy's way low. I do know him. These guys here in the middle, I know them well and they'll execute. And so, have won, deals that way. And, you're right, man. I mean, it's still competitive. There's still guys that wave money around that, can beat us. But I think that, even though things have slowed down a little bit, I think the biggest thing is, obviously, being able to execute and do what you say you can, but like speed, right?
Yeah.
If I get a call from a broker, this afternoon, like I'm going to try to turn that deal around by, tomorrow lunch, right? Just to at least say, hey, like I've looked at it, here's where I think I'd probably be, and so that is, important, right?
So
because-
when a deal comes in, what does that process look like from there? What's kind of the first kind of sniff test things where you can kind of give it a quick green light or red light, and just walk me through the process to getting
sure.
to, maybe doing a site visit and that kind of thing and all.
Yeah. So we have, a VA and an executive assistant, and our VA, we've set up kind of a process to allow us to underwrite, a couple hundred deals a year. And so I'll send her the email or and the T12 and the rent roll, and she'll build a folder. She'll build out, our model in Excel. And then she also will download, some of the census data that shows the median household income for that address.
Yeah.
And some other things, but, and then kind of a first pass test on that, right? Like, is it in DFW or, down to San Antonio near I-35? Is it, median household income can support the rents, right? I mean, that's important. And then, I'll underwrite it myself, right? And so I'll just go quick, redo, check all the information that she's done. I mean, it takes me 5-10 minutes for a second pass. And then, a lot of times, like, maybe we're $1 million apart, maybe we're 10% off, I think that usually, if it's in a location that I get excited about or agree with, and we're close enough on price, then, we'll go tour the deal and make a run at it. But, I'm not throwing out offers on every deal. I'm not sending hundreds of low balls. I mean, you also don't want to be, known as the guy that's lowballing everything, right? So it's like, if we underwrite 100 deals and we find 10 of them that are interesting, let's tour those 10, and maybe, 5 of those we end up seriously going after. And, if we're seriously going after something, then, the probability of us, executing that deal is pretty high, right? So, making sure that we're spending our time wisely, on the deals that we want to chase.
And does the site visits kind of there to confirm that what you've put into your model there makes sense? And, are you usually trying to estimate like a per door kind of renovation, or, what does that look like? I guess it depends on the deal, but, let's talk a little bit about that.
Yeah. I think that, if every deal was in my neighborhood, I would probably drive by it first,
Sure.
So when we're underwriting, I do a lot of, kind of walking around on Google Earth, just to kind of see the neighborhood.
Yeah. The deferred maintenance as well on the roofs, and stuff like that.
Yeah, absolutely. Flat roofs, HVACs, chiller, busy intersections, whatever. And so then, and there has been some times where I've passed on a deal, and then, I'll get a follow-up call, and, I'll say, hey, here's why I'm passing. And, sometimes I'll, end up going and touring that deal, based on the call with the seller or the broker. But, I would say that the site visit is usually a feel visit. And that's kind of hard to explain, but, after a while, like you can feel the property. Like I can walk on a property and feel if it's all housing. I can feel if it's all bills paid. I can feel if it's, people are at work. We
Sure.
have somebody else coined this term, but abandoned car ratio.
Mm.
How many cars are,
Yeah.
uh,
Just
uh,
just sitting there in the parking lot.
yeah,
No one's
never
touched them
move.
for exactly.
And
Uh,
I think it's important too, right? Like we've bought properties where people are sitting on the porch, already boozing at 10 a.m.
mm,
That's going to be a heavy lift. And then there's other deals where you walk it at 2 o'clock, and there's not a single car there, which means everyone's at work. So like I think that those things are important. I think that you can gather information from the leasing agent,
mhm. Yeah.
depending, right? Like sometimes the brokers will coach the leasing agent. So you need to, be able to sniff out what's, a
Yeah.
script and what's not, right? But I think that, we're walking it and we're saying, hey, this is probably going to be, 10 grand a door, and we're gonna have, we're gonna come down on occupancy a little bit because we're gonna re-tenant some of it, or we can oh, we like deals that have, in theory, green space, larger bedrooms, families,
Hmm.
where we can add amenities, right? I mean, if you have kids and families, they're probably going to stay longer. They're probably going to, enjoy community events more. And if you have room to build a playground, that's a win, right? So, we've had properties that didn't always meet that criteria, but maybe it was, in the market, we had some micro units, right? And it was a concrete, parking lot, but we killed it because we just, our renovated units were less than everyone's one bedroom. So, it all really depends, but I think we really, can we add value to the community? Because
Yeah.
that's, again, if you can't add value to the community, then, you're just probably spinning your wheels, right? So,
Yeah. Yeah. What does that look like? So how much is that market in the markets that you're in? How much have they grown over the last few years? And do you expect that to continue? And how has that affected the supply in the market and the demographics of the people that are renting in those markets? And then too, just like new supply coming online, and like let's talk about all
yeah.
that, going on.
Yeah, yeah. So Dallas, Fort Worth, has stayed, you know, uh, pretty full. Occupancy hasn't, really dipped. I think that, there's still a lot of new construction here, but I mean, it's all A plus stuff, right? So, you still, got to be able to afford $2,000 a month to live there. I think that cap rates have decompressed. For a while we were at, I mean, it felt like a 3.5 to 4.5 spread between all the classes, right? So there was a lot of people who said, why am I going to buy a C minus for a 4.5 cap when I can buy a B plus for a 4? And I'm like, well,
Sure.
you're not wrong.
Yeah.
And we didn't buy a ton of those deals. And a lot of those deals, fixed rate debt didn't work, and they got short-term variable rate debt. And
Uh,
since the peak of 21, 22, I mean, I'd say we're probably, I think values are probably down 20 to 30%.
mm,
Cap rates have expanded back out to probably a 200 basis point spread. So I'd say C's, just for easy conversation, C's are at 7 plus, B's call it 6, A's, probably high 4s, but just call it, 5, 6, 7 to make it easy, right?
mhm, mhm.
But not a lot of low occupancy deals. I think that there hasn't really been fire sales, and I don't think there's going to be fire sales in Dallas. I mean, even the ones that have been taken back by the lenders, like the lenders are being smart. They don't want to flood the market with REOs.
Yeah.
And and they're spending money. They're spending money on the deals, and it might not be by choice, but it could be life safety issues, right? So
Mhm.
they're putting money back into the deals. They're trying to sell them, and I mean, we're trading lower than we were a couple years ago, which is great. So I think that we're probably close to the bottom in Dallas. San Antonio's a little softer. That there was a lot of new construction in the Northwest. There's been some softening in occupancy, and rents, but again, like we try to beat the market, right? And when you put residents first, I mean, you tend to stay full. And how do you put residents first? Well, we fix stuff when it's broken.
Mm.
And you can't fix stuff when it's broken if you run out of money. So,
Sure.
if there's people who run out of money and occupancy hurts, and maybe we adjust our specials for a little bit, but we stay full because people stay with us because we fix their problems, right? Because
Yeah.
residents first. So, you know, I think that the fundamentals are still good. We're still short on units. Supply and demand is always going to be the driver.
Sure.
And if you have enough runway, you can cross any dip. So I think that the volume has been slow. Because there's some people who can't get out of their deals that want to. That they're getting offers below their debt, right?
Mhm.
And that doesn't mean that the asset itself is poor. It just means that the deal that they bought it in,
Yeah.
maybe was structured poorly or overpriced. So I think that there's you know once we need the money to start moving. We need deals to trade. We need inventory to start moving around. And I think there's a lot of people that are locked into deals, and maybe the lenders don't want to take them back. And
Yeah.
so it's kind of a waiting game. And I think a lot of people had thought that rates would come down more by now, and they haven't. So but there's always sellers for one reason or another.
Mhm.
And there's always deals that are being mismanaged and need a capital infusion. And those are the ones we try to identify. So,
Yeah. Well, let's see. You've mentioned a few times, the importance of the residents' experience in the community, and I think that's such an important aspect that sometimes people it gets lost in the weeds, it gets lost in translation, and I think it's funny because it's probably the most
yeah,
important thing at
the
the end of
number
the
one.
day. Because to your point, even with investors and things like that, it's just like it all trickles up, what I mean, at the end of the day, or trickles down, however you want to put it, to that tenants and residents experience. So how are you building community? How do you operate, the property management side of the business, the construction management side for turnover and, value add to the units and stuff like that? Are you doing that in-house? Are you leveraging third parties? What's that look like?
So yeah, we use third party management. And we at this time we have a different company for each one of our assets, because they're different assets, and
Mm-hmm.
different skill sets, right? Or locations, or whatever may have you. I think that it can be tough, once you get enough units. It makes more sense to bring it in house. But we're doing third party for right now. But we're extremely active, and we do our own construction management. So Catherine really GCs the project.
Okay.
So she talks to the manager pretty frequently, right? And through that, we build relationship with the property management company. And they realize that we want to take care of the residents, and residents events are important. I mean, we really try to do an event once a month,
Well,
Valentine's Day event, a St. Patrick's Day event. We'll probably have an Easter one. And I think it's important to try to build community, and, know what the residents are looking for. And, it's not always, how do you say, it's not always, black and white, right? As far as like, you know, we try to work with people, you know, if they have late, you know, if they lost their job, you know what I mean? Instead of just
Yeah.
straight going to eviction court, right? It really is, you know, trying to work with people.
Yeah.
You
Got to
know,
bring in a personal touch in, you know, I feel like people, especially at scale, you know, they kind of get away from the personal touch and
yep.
they want to do everything through systems and processes and management teams and things like that and all. And I think there's something to be said for that. Maybe too at a certain scale, it just needs to happen. But I always feel like you're at you have a unique opportunity at certain sizes to bring a more personal touch.
Yeah.
And to your point, you know, it's a good investment at the end of
Yeah,
the day. I mean,
it's the best investment you could make. And you know, I even heard someone make a point about it and, you know, A+ stuff, right? Like, you know, there was a, you know, a point after COVID where there was virtual showings and, you know, you can download an app to go into a unit and you
mm,
can tour yourself, right?
yeah,
But
yeah,
if you have, you know, no matter the class, right? If you have five, let's just use this as an example. If you have 5 deals and 4 of them have self-guided tours and one of them has an A+ leasing agent,
yeah,
you know, I would be willing to bet that, and this goes back to 100 little things, right?
yeah,
Self-guided tours, there could be a log in the toilet, you know, nobody's checking that stuff,
yeah,
right?
yeah,
You know, food on the floor, whatever. But the one that has the human, I bet you that tour is probably, if they're good, is going to go a little bit better. So, you know, as much as technology, you know, we think it's going to take over the world, at the end of the day, like I think that, you know, you still have human to human interaction, and that's always going to win. You know, if
yeah.
that's, you know, what you lead with.
Yeah, I completely agree with you. You know, to your point, you know, you can only kind of tech out so many aspects of every business. Yeah, I mean, it
Yeah.
gets to be a point where you know personal touch is there, and it's just sometimes it's not right for everybody, you know,
Yeah.
and so sometimes you have to know your audience, and if you have a younger audience, you know, maybe they would prefer to have the virtual tours and
Yeah.
things like that. But even then, I think you know sometimes to have the choice is good. So I completely agree with you there. I think that makes sense. Well, this has been a great conversation, you know, just so many good nuggets throughout, you know, on the way you're thinking about things, the way you look at things and all. So I appreciate you talking to me and coming
Yeah.
on. For somebody that wants to learn more about what you do, how can they get involved with you, Jimmy?
Yeah. Our website's High Five Multifamily, spelled out HIGHFIVE multifamily.com. And get in touch with us there, you know, pretty easy. Love to talk real estate. So, hit
And what
us
was
up.
the line? Did you say 100 little things, or is that what you said?
Yeah,
1,000
100
little?
little
Where did
things.
you come up with that yourself? Or I like that. I'm going to steal that.
It's for 15 years it has been my thing, but I didn't always have a name for it. And then we had a property manager, Jay, you know, and we were talking about this, and he's like, yeah, 100 little things. And I'm like, yeah, 100 little things. So I
I
didn't
love it.
coin the term,
Yeah,
but we've been operating that year for, you know, forever, right?
yeah.
Attention to detail. But yeah,
That should be the name of your blog or podcast or something like that.
I love
I
it.
would tune in.
I love it. Yeah, for
Cool. Well,
sure.
Jimmy, thank you so much for being here. I appreciate it.
Yes, sir. Thank you, Peter.